Hello everyone, my name is Matthew Frailey, founder of BreakpointTrades.com, which I founded back in 2003, providing advanced technical analysis, market commentary, trade ideas, and sophisticated trading algorithms like you see here with our 21 SPY and ES mean reversion systems. But more importantly, we're really excited about our new KISS trend following system. So go to the systems section, KISS STS tables. Let's go and take a look at that. So the KISS system is a trend following system. It's long only. The amazing thing about it is that you can throw it on virtually any instrument, ETF, index, and it's profitable with no backtesting. That means no curve fitting. I've been doing technical analysis, charts, systems for 25 years. I've never seen anything like it. That's why we're so excited about it. But anyway, we run the system on over 630 instruments, all the NASDAQ 100 stocks, all the S&P 500 stocks, over 100 ETFs, all the Dow Jones 30 stocks. We have various baskets here of select stocks. You can set favorites. Anyway, so the system, again, what it does is it goes along. It has its proprietary entries for that. It then sets an initial smart trailing stop, and then it raises it up over time, constantly protecting that profit, preventing you from going through big drawdowns that you would on a typical buy and hold methodology. And it's kind of like having life insurance for your portfolio. You know, we all have life insurance because we're adults, we're big boys, and that's the same thing with trading. I mean, you know, you should have the KISS system kind of like a life insurance for your portfolio. But so here's the top 100 ETFs. You can see some of the positions that it's been in. Look at some of these awesome gains. Again, we've had a hell of a move in the market, and a couple of these are leveraged ETFs, but still, you know, if you look at these, SOXL, that's the leveraged semiconductor ETF. So it went long on November 1st, and the current stop, smart trailing stop, is 2610. It's raised its stop 13 times. You could click on the chart symbol to actually see the chart. Let's go and take a look at that. So here's SOXL, and you can see these charts are dynamic. You could zoom in and out, but the system went long right here on November 1st, so just a couple days off the low. By the way, you see there's a DeMark 13 right there. That marked the low, but its system went long right here, put an initial stop at 14, right at basically at the swing low. And then you could see it raise that stop up over time. Basically, it raised it 13 times. Currently, it's right here. Keeps the stop wide enough to avoid noise, but also tight enough that you don't give a lot of profits back. So that's an example of how the system works. It's cool on these charts is you can actually zoom back and you can look at previous trades and stuff like that. It's pretty neat. But anyway, that's a reason to sign up for Breakpoint, which you should consider. You won't find anything else out there like it. Anyway, let's get back to our newsletter video. The last video I did for YouTube was on Sunday. I did a newsletter for our website, standard webpage on Monday, and today it's Tuesday, December 19th. This is our backend recorder, which I'm starting right now. So, hello everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Tuesday, December 19th newsletter. Happy holidays, everyone. Merry Christmas pretty soon. Again, hope you're all having a good time. Steve Nelson, he's still out of town in Mexico, and the newsletter here is coming out a little bit later than normal. I have friends and family that have come in from China. So anyway, but otherwise, again, newsletter divided into 6 major sections. By the way, I added some new trade ideas. Long ideas, Google, NNOX, both of those have nice coils. HIMS, it's a nice base, and HE. Okay. As far as the market, like I said, not a lot to say, guys. You know, we're in holiday mode. The momentum train just keeps on a trucking. The market is in holiday mode. It's in Santa mode. Whatever. It is what it is. It just keeps going. You know, the Bulls intercepted the football basically in late October, and we've had one mammoth rally. I think the market is up something like 10 weeks in a row now. Pretty crazy. Eventually, we're going to be due at least for a mean reversion pullback, but so far we haven't got it, and then we're in the holiday mode. Again, the beauty is the KISS systems went long back in early October or early November and have caught basically this whole trend, which is pretty cool. Let's see. Next, moving on, item number 2 shows the index sector table, what transpired today and the week. So yesterday was more of a consolidation day. Today the indexes were up more. S&P and NASDAQ up about 0.6% or so. The Russell, which lagged a little bit yesterday, came roaring back up almost 2%. As far as the major market sectors, we follow 21 sectors. Every single one was up today, so pretty broad-based rally with participation in all groups. Currencies, US dollar fell 0.44%. That helped things. Cryptocurrencies were down slightly today, but what really rallied, again, continues to rally, are the crypto stocks. Things like Mara, Hive, Riot, etc., which have been on our watch list. Commodities, once again, to the upside. General DBC up 0.75%. Crude oil up 1.5%, up 3% for the week. Remember, crude oil rallied nicely off that demand zone that we've been showing. Natural gas slightly weak. Copper bounced back. Again, most of the commodities are up here except for corn. And the precious metals followed through again today, helped by that falling dollar. Gold up about 0.7%, silver up 1%. GDX, the miners, up 2.7%. They continue to lead. And, the 10-year treasury yield fell, so that continues to help. Next. Item number 3 shows the economic news calendar tomorrow, December 20th. MBA mortgage, current account balance, existing home sales, oil inventories. Next. So before we get into the charts for the newsletter, again, and this is something I discussed in the beginning of the video, but I'm showing it again in case you didn't watch the YouTube video and you're just watching our standard newsletter format. Again, if you haven't done so, go to the system section, go to the KISS tables, set some favorites, and then go to the favorites tab. Click that box so you can start receiving trade notification emails for your favorites whenever they go long, whenever they enter, whenever there's new stop. You can see some of these amazing gains on the systems. Again, market's been in one hell of a trend. Obviously, that's helped things, and a couple of these are leveraged ETFs, but still, they've caught the trend, and they've done extremely well in raising their stops, protecting it. Again, I kind of like to use the analogy of the KISS systems are like having life insurance for your stock positions. Okay, your STS, that's your life insurance. Next, moving to the index charts, chart number 5. Here's the daily snapshot of the major indexes. Again, guys, you could see that bottom in late October when we were extremely oversold below the lower Bollinger Bands, bearish sentiment, and then just a rocket ship up since. I mean, look at the Dow. You got basically 1 or 2 day pullbacks at most. No movement even below the 9 EMA. So this has been one hell of a powerful rally. We had a breath thrust at the beginning of it, which confirmed it. We're above the upper Bollinger Bands for many days now. So we are quite stretched, but market hasn't wanted to pull in yet. Next. Chart number 6, here's the Dow. And again, same thing. Dow's just been, up and away. Superman. You get a nice positive divergence here at the October lows. But, again, just straight up. What we're seeing, again, the nice thing is we're seeing broad market participation, which we did not see early in the year. We just saw, 7 to 10 big cap tech stocks leading everything. But what's been happening over the last month or two is we're seeing all these smaller stocks play catch up, and that's a good thing. Next, image number 7. So here's DIA, that's the Dow ETF. In Monday's newsletter, I pointed out this little black candle doji. I drew a horizontal line on it, and I said if you go below the lower the doji, you could get a short mean reversion trigger with a target at the 9 EMA. Well, that didn't trigger. We just simply went up. And that's the thing about trading, guys. You got a trigger, it never triggered. So you didn't enter a trade, no trigger, no trade. Next. Image number 8, here's the S&P. This is the weekly chart. As you know, we took out that resistance last week. And we're up and away. Again, the next logical, easy target is the all-time highs at 48.18, 48.19. Just a stone throw away now. Next. Jarbor 9, here's the daily S&P again, up, up, and away. What can I say? I mean, there's no MACD divergence. There's no RSI divergence. Yes, they are very overbought. RSI 5 is at almost 95%, but there's no divergence. Next. Jarbor 10, here's the KISS system, which I discussed, the KISS systems extensively in the beginning of this newsletter video. But you can see how these have done. The KISS system went long here on the S&P. Current smart trailing stop is 4,600, so it's nicely protected, and we had a nice trade earlier in the year. Next, image number 11, here's the 4 time frames, the daily, the half day, 130 minute, and 78 minute. Again, not a lot to say, guys. We're just uptrending, uptrending. Price is simply following the ATR on all these time frames. So those are kind of like a support guide. Okay. Next. Jarbor 12, here's a 60-minute chart. So again, you can see the beginning of the uptrend move from late October, up 700 points since then, which is just absolutely insane. This last move is setting up some MACD divergence. You can see the MACD is really lagging here. Again, divergence is not a sell signal on its own. The divergence was there yesterday. So that's why you have to have a valid trigger when you see divergence. Divergence can be negated. If the MACD decides to pop up, that divergence is gone. But it is there at the moment. Next. Jarbor 13, here's the 15-minute chart that I showed late last week. I was showing this coiling action, which was simply a consolidation in the uptrend, and powered up nicely. And again, until trend reverses, really not a lot to say. Next. Image number 14, here's the Qs. Just continue powering higher, up, up, and away. New all-time highs. Jarbor 15, here's the weekly view. Again, we're working on this wave 3 of 5. So what you have here is a potential nested 1, 2, 1, 2, and you have a 3. That was a little 4. This would be a 5 of this sub count, and then, but once this is complete, it would be a 5 of 3. So then what you'd have is, once that's complete, then you have a larger fourth wave pullback, but then another move up in a wave 5. Let me see if I can draw that out for you guys. There we go. I need to find my drawing tool. So once this is complete, this wave 3 of 5, you should have a deeper ABC pullback for a 4, and then you get a new move up in a 5. Okay, that's assuming this is the correct count, but definitely seems very possible. Next. Jarbor 16, here's the half-day chart just showing the same thing. We still technically have a MACD divergence here, but you can see how it continues to work higher. This could be negated. If this takes out that high, the divergence is gone. That's why it's not a sell signal on its own. Your last buying opportunity on the indexes were here in early December on that sideways little shallow pullback wave 4. Next. Jarbor 17, 60-minute view. Again, just like the S&P, little divergence here on the MACD, but price just continues to melt higher. And Jarbor 18, here's a 30-minute chart. Now we still have technically, I didn't adjust the trend lines here. Forgot to do this, but you still technically have a potential little wedge forming here. I could adjust these trend lines a bit. So we'll see what that looks like tomorrow. And currently tonight, let me see what futures are doing. ES futures are flat, so this wedge could still potentially play out, but we'll see. Next. Jarbor 19, here's the KISS trend system for the Qs. Again, you can see that beautiful entry back there, and I think this was October 31st. So one hell of an entry there. All the smart trailing stops. No new one today. Still 390, but excellent, excellent trade. Next. Jarbor 20, here's the 4 time frames. Again, same look essentially as the S&P. Now we do have a little DeMarca 9 on the daily, right? So that's something to take notice of. Last time we had a DeMarca 9 on the bottom, this bottom, which was of course a great bottom, and we had one down here, which produced a bounce. Next, Jarbor 21, here's the Russell, which paused yesterday but roared back again today. breaking through some resistance. Just again, one hell of a move. The Russell lagged all year long, and it has played major catch up. So we've seen all these broader, smaller cap stocks participate in the rally instead of just Apple and Nvidia, stuff like that. Chart 22, there's the monthly, up 11.8% in 1 month. Starting to take out this little resistance area. All right, that does it for the indexes. Let's move on. Let's look at some of these indicators. Here's the VIX. So the VIX, again, despite the market melting up, it's still something I say you should watch. The Bollinger Bands are pinching here. A bigger move can occur when that happens. Now, what sometimes could happen is, the VIX is either going to move up and we get a pullback in the market. But what I've seen sometimes is you first get a thrust down, kind of like a little trap, and then it reverses. But these pinching Bollinger Bands, and also if you look toward the bottom, erase those lines. This correlation indicator, you can see the VIX is now uncorrelated with the S&P. And these times when it becomes uncorrelated are sometimes inflections in the market. Like even back here in late October, it was slightly uncorrelated there, and that was the bottom. So that is definitely still on my plate. Next, chart 24, here's the half-day chart. Still in this channel. We're testing the channel line. We'll see if we bust out of that or not. Next, chart 25, the NYSI 9 EMA crossover system. Again, obviously no changes. That was one hell of a signal. Remember, guys, as a subscriber, you can get the live chart URLs to these, so you can bookmark them in your browser and check them anytime, and you don't have to recreate these charts. We freely give you the live charts. Chart 26, here's the NYAD. So I've been showing this. There still technically is divergence here on the NYAD. You can still see it hasn't taken out the recent highs while the S&P has been roaring higher. So you still have a divergence here to be aware of as well. All right, moving on to bonds and rates. So chart 27, high yield corporate, up slightly today. Next. Chart 28, high yield corporate versus the S&P. Again, the two tend to follow each other. Just look at this correlation. What you look for is divergences. In October, late October, you had a positive divergence where high yield corporate started leading higher before the S&P. That was your warning. Right now, you really don't have, I guess you have a slight divergence here. The S&P's making a higher high. This hasn't yet, but it's not real pronounced, but it is there. Chart 29, here's that 60-minute chart I showed last night. I said it looked like a bull flag. Broke out of here a little bit. Market obviously followed higher. Chart 30, here's the 10-year Treasury yield, which was down yet again today. It's still around this 61.8 fib area, which is still an area that to watch for a potential bounce, but one hell of a decline from that October high at 5%. That is correlated with the market rally. Let's be honest, that is a big reason for this huge market rally we've had. I made a good call about calling for a top, intermediate top on the rates there. Chart 31, the monthly view of TLT. Again, this is reason why I called the top in rates back in October, was because TLT was at this major support with a fifth wave decline. Okay, so we're now working on this larger ABC higher, which could take up to a year to form, but it won't go straight up. It's going to be some sort of three-wave likely pattern, as I show. Next. Just following up on a few of the sectors. Keep it brief. Here's XLK Technology. Just continues to melt higher. Chart 33, semiconductors also holding up well. Moving average ribbon is very wide, so it's not something I would be wanting to go long at this point. Chart 34, banks. Now banks, they've had a heck of a move from this double bottom. Right now, it kind of has a bull flag look to it here. So you may want to look at some bank stocks for trades. KBE is the ETF. Chart 35, XLE Energy. This was the demand zone, which it rallied off of last week. So that was a good area to go long. Hope you just put a stop right there. Price is now above its 50-day moving average. Chart 36, oil services. OIH also rallied off that area. You also had a 61 fib here. Next, chart 37, emerging markets, broke out of this flag pattern, is working higher so far. Full pullback in the dollar is helping that, obviously. Moving on to commodities. Jubber 38 DBC, nice rally off this demand zone. Okay. Again, these demand zones are great areas to take a shot for longs with a stop. Jubber 39 crude oil, again, nice rally off that demand zone. That was just absolutely textbook. You also had kind of a 5-wave pattern here, which I pointed out. RSI divergence. Next. Jubber 40 natural gas, nice mean reversion bounce, pulling back a little bit today. Jubber 41, here's the weekly chart. Weekly chart last week, you had this big doji. If you triggered off that, your stop would go essentially at the lows. Next, Jubber 42 copper, bouncing back today, tagging this trend line, finding some initial resistance here. Again, this area down here, this major support around 350, that was an excellent area to go long. Right now we're testing resistance. Chart number 43, DBA agriculture ETF up today. It is forming into a tight coil, so something to watch for a trade. Next, looking at crypto, here's Bitcoin. This is just the weekly chart. Slightly up this week, still up around this 50% fib. We made a great call last year. I think Steve marked this as a 5th wave low last October, and that ended up being an excellent call. That was the bottom in Bitcoin. Next, looking at a few of the crypto stocks. Mara has just been up and away like crazy. We had it as a long idea back here in November out of this coil. Your long trigger would have been around the 1050 area, and guys, it is up 120% since then. One hell of a percentage move. If you bought 500 shares there, $5,000, let's say, and if you still held those shares, you would be up, 5 times. You would be up substantially enough to pay for the subscription for many years. So just something to think about, guys. Just, some of our trade ideas, systems, will pay for your membership for years and years over. So just something to consider. Excellent move on this puppy. Next, Jubber 46, Riot's been on the list. It triggered technically yesterday. Today it followed through. Little black candle though. Still looks okay. And Jubber 47, Wolf. This one had a diamond. Triggered yesterday. Followed through a little bit today. Next, Jubber 48, US dollar. After yesterday's bounce, pulling back a little bit. You do have a MACD divergence here to be aware of, but otherwise, you could see that little potential wave 4 bounce. You had a bearish moving average pinch that lined up. Jubber 49, gold up today. Again, what I still don't know is if this is some sort of wave B that'll come down again, but the very bullish case is the nested 1-2-1-2. The positive here is the stocks continue to lead. You can see on the GDX GLD ratio, it continues to point straight up. Jubber 50, silver, up slightly today. Again, last week bounced off that trend line. You can see otherwise it's in this larger pattern. Jubber 51, here's the monthly view of silver. It's still in this large 4-year coil. This is something to watch, guys, because when this breaks, this could trend up for a couple years. So you could buy silver ETFs and just hold it for a good long swing. When things build into a coil, energy is building, and usually when it breaks, energy is released and you have a powerful move. Next, Jubber 52, GDX. Very nice move. Had this sort of inverse head and shoulder here. We had another higher low here, which I said to put your stop at, and we've powered nicely higher since. Jubber 53, there's the weekly forming into a big coil, which we haven't broken out of yet. Jubber 54, here's the 60-minute view. Last night I mentioned how GDX had a bull flag look, and that played out with a nice pop today. Next, Jubber 55, GDXJ, that's the Gold Miner Junior ETF. Again, similar looks to GDX. So again, kind of like gold, The bullish view would be a nested 1 2 1 2, and if that's the case, we'd be working on wave 3. If that's the case, the stock should start really ramping up here because your wave 3 are your stronger moves. So we'll see if that transpires. Let's take a look at some individual names. Jarbor 56, AEM, it's been on the list. This inverse head and shoulder pattern. Again, it looks basically the same as GDX. Very nice trade, though. Jarbor 57, GOLD, similar look as well. Jarbor 58, BVN. Man, I didn't look. Obviously, some news on this. This is a gold stock, but man, this thing has went straight up vertical. Crazy move. I'm not in it. Next. Jarbors 59, RGLD. Here's one to monitor. Kind of a base forming. Next. If you want a cheapie, Jarbor 60, Argonet. 30 cents, but you have kind of a double bottom W type pattern here if you want a cheaper, junior stock. And Jarbor 61, ARMN, another one kind of flagging here. Good volume patterns. All right, guys, let's follow up with other trade ideas. First off, we'll discuss some recent long ideas. So Amazon, I put it out on the watch list last week. Nice move. Potential targets 160, 165, but my style is to take a little bit off the table and then trail the stops up. Nicely profitable trade. Jarbor 63, KNSA. This was a long idea of mine from the weekend. Popped yesterday. Another move up today. Nice trade. Take some profits. Jarbor 64, Rivian. It's been on our list for a couple weeks. Really nice move, obviously. Next. Jarbor 65, Tesla. It's not moving like the other stuff, but it is meandering higher. You got a trend line break here, which we pointed out, and then it's been working its way higher. Rivian's been really screaming, though. Jarbor 66, Derm was a long idea from the weekend. Coil pattern popped huge yesterday. Was up today at an all-time high before pulling back. Great trade. Jarbor 67, Nerd Wallet. Coil pattern from 3 weeks ago. Really super sweet move. If you're still long, just trail the stops below the 9 EMA at this point. Ride the trend as long as possible. Jarbor 68, ATHA. Long idea from a few weeks ago. Again, it hit its target at the 200-day moving average. So I got exited. I'm not in it anymore. If you're still in it, you could put a stop just below that 211 area. Jarbor 69, Airbnb, played out obviously. Another beauty. Jarbor 70, ABAT, another beauty. This has been on the watch list. Nice base, good volume patterns. I've been targeting this area. That's my target. Very nice percentage move. Jarbor 71, AVGO, one hell of a move. I put this out over a week ago. Little doji today. It's very extended. Look at the ribbon, how wide it is. Again, it was low risk here at near these moving averages, the 50-day, and see how the moving average ribbon is pinched, squeezed. That's when you get your powerful moves, guys. Now it's wide, so it's maybe due for a mean reversion pullback. I'd be locking in some gains. Jarbor 72, CTSH, another one that's played out. This I mentioned a week ago is that I was just looking for maybe a few-day trade. So this is one I'm fully out of. It was a nice trade, though. Jarbor 73, VTNR was a nice trade as well. I'm probably not going to show this one again. It was a nice little quick trade out of this wedge. Jarbor 74, Massey, just continues to work higher. Again, we had it as a long idea back here in November, early November. At this point, if you're long still, just trail the stops above slightly below the 9 EMA. Ride that trend as long as you can. Jarbor 75, BYON, another one from November. Just trail the stops up like I show on the dotted line. I'd use that last higher low at 24.05. Jarbor 76, FSR. This is this kind of oversold play I've been monitoring. But again, I said it needed to take out this 20-day moving average and trend line. Today, it's stalled there. All right, I still got a little bit of it. But, we'll see. It needs to clear this area for me to add to my position. Potential capitulatory volume here. You got the MACD divergence. Jarbor 77, here's that 2-hour chart. This is kind of what I'm looking for a trigger. You got a base here. I want to see it clear this trend line. Jabber 78, APO, breakout idea from the previous week. It's worked its way higher, but again, guys, it's not powering up. So at this point, I would at least have a stop at break even. No reason to take a loss on it if it reverses. Jabber 79, Peloton, one from last night. It's still valid, hasn't triggered. Resistance is around the 670 area. Jabber 80, Google, nice tight coil. This is one to watch. Wouldn't be surprised to see this power up. Jabber 81, NNOX, nice long coil base pattern. I like this. See if we can pop over that. Jabber 82, HIMS. Nice uptrend, pulling back. 9 EMAs squeezing with a 20. Moving average pinching a little bit, so this could be one to start another move higher. And the final chart, Jabber 83, HE, Hawaiian Electric. Again, it's a utility. Nice long base. Obviously, they had some problem. Actually, I think that was the that fire when this got nailed. But you know, it's been quite a few months ago. You got a nice base here to potentially trigger from. All right, guys, that'll do it. We'll see what happens tomorrow. Again, happy holidays. Thanks for all your support. And I'm looking forward to a great 2024 with those KISS systems. Take care, everyone.